Ygal Arounian, managing director at Wedbush Securities, joins us now. He covers names like Alphabet, Twitter, Facebook, which are all getting hit again after a lot of them have already been hit pretty hard on this prospect of rising rates. Ygal, are you a buyer on some of the valuations right now, or do you sell because the macro noise is still there and it's still proving to be pretty vulnerable for this group?
Sure. Look, I would expect to continue to see some vulnerability, as we kind of move throughout the next couple of months. I am a buyer of strength and high quality names with a lot of the valuations we're seeing. A lot of names are trading at trough valuations, and I think the macro certainly off the highs that we've seen over the past couple of years, but it's also holding up still relatively well. That can certainly move in the direction if rates keep going higher and the macro weakens, especially around the consumer. But so far, we're seeing still pretty solid health in a lot of pockets and a lot of valuations that I think you can consider pretty attractive right now.
Like what? Which one do you like the best?
So if I think about that combination of highest quality with most attractive valuations, I would put Alphabet up there, right up near the top. Definitely one of the highest quality names we cover. I think still the fundamentals there are in pretty good shape. You can kind of go further down the curve with names that might be a little bit riskier, but the valuation there is even more attractive. Staying within that digital ad space, Pinterest is kind of right up there. We cover Shopify. That valuations come in quite materially. Consider them a best-in-class e-commerce operator. So there are a lot of high-quality companies with valuations that, if the fundamentals improve a little bit, think about where we are right now. We should start to see re-accelerating growth as we lap the toughest comp here in 1Q for most of these companies. Some re-accelerating growth. The macro holds up a little bit better. Estimates can move up again. That's the kind of recipe you need for valuations to re-rate and expand. And I think there's a lot of those within this tech pocket.
But not Twitter. You still don't like it? You're still neutral, even with Elon Musk now as the biggest shareholder and a board member?
Yeah, again, go back to the fundamentals. And so, Elon Musk coming on, being on the board, I think net that's a positive. But where his focus has been, around the free speech and, what should be acceptable and what shouldn't be acceptable on Twitter, that's fine, kind of good conversation. But, kind of think about what's going to drive Twitter forward here. What should drive the valuation and the stock. And that's user growth and it's better monetization. Now, is Elon Musk coming onto the board of Twitter going to drive better user growth? Is debate around free speech going to drive better user growth over the next couple of years for Twitter? I think that's debatable, and there's a lot that we need to see to get more comfortable with that.
It's so interesting. Brent Thill yesterday also, analysts not impressed by Elon Musk. Thank you, Ygal. Good to talk to you. Ygal Arounian.